Hello everyone, it is September 21st, so this is the London and New York overlap period that I'm trading here on September 21st, and figured I'd do a video on this day because there were a couple interesting things that went on. Pretty good overall day. As you can see, 5.5R for the stats. I'm going to knock that down a little bit. I took a big win here by expanding my target out a bit. And so we'll talk about why I did that. But for the stats, we'll just put it at 2.5. Also, this one made a little bit on it, but we'll talk about it and why I took it. I'm not going to include that one for the stats because it was a little bit more of an advanced setup, but I wanted to talk about it because it still fits the parameters and what we want to be looking for in terms of price action. But like I said, because it's a little more advanced, I didn't include it in the stats, even though I made some profit on it. So yeah, we'll just go through this day as it unfolded here. So I started trading at 6:30 a.m. That is Mountain Time. That'd be 8:30 a.m. Eastern Time. Nice sell-off here. We had a big double pump, but we had some news out. Not significant news, but building permits at 6:30. And so big double pump here. Would have been taking this short here. Looks like this one actually probably would have survived all this if he had taken it and forgot about the news into this downtrend here, but we don't take trades right before news, so no double pump there. Then we can see these peaks. They're all pretty close together, and we have these ascending lows until this happens. We have this big sell-off, and we have this spike up. Now this was a pretty big pattern. A lot of times you'll see on my charts, rounded tops, rounded bottoms are pretty small. Each one of these waves is covering a fair bit of area. And so for a bigger pattern, I typically like to wait for a bit more confirmation. And what will happen is that you'll often get a similar looking other pattern, such as in this case, we had a double pump here. And it isn't quite our standard double pump in that it didn't come all the way down here, but we have a little drop, push back up, and then a little drop again. So what I was really watching for here is this had a fair bit of momentum coming out of a big rounded top pattern. So this could easily, keep drifting up a little bit, just because we have lots of momentum. So what I was watching for is to just see how this continued. And so, if we would have taken the first entry point there, I think it actually would have ended up being okay. Our stop loss would have been just above there and just out of reach of that. So that we could have taken that one there. But I just wanted a little bit more confirmation because this is a big one. So again, it's not just about like hammering a pattern as soon as you see it. It's looking at the overall context of the day. We also want to see how much room is there for the price to move toward our target. So I had a 2.5R target down here that was right near the prior low. If we kind of scroll back within the day, last few hours, we had lows down here. So, we're still within what the price has been doing. And we knew that we were in fairly low movement overall, 16 pips. That's just kind of right on that minimum threshold of 15 pips where, I'm at below 15 pips, I'm pretty hesitant to take much. And at 15 to 20 pips, it's kind of like, okay, we'll take some trades if they're there, but we're still going to be a little bit cautious. And we're going to look for more targets within the current price range. So this target here was this dashed blue line. That was the 2.5. That was totally fine. I expanded this target out and thinking if we get close to this prior low, it's probably going to take it out, which means it's probably going to be within a pip or two of taking out these lows. And if you've traded Forex for any amount of time, the Forex market has a strong tendency when it gets close to prior highs and lows to at least take them out. It tends to clear out any stop losses or whatever. So it got close, but we got this reversal. And I just put here, pull back, but no reason to get out. We don't want to just bail on a trade simply because it pulls back on us, because that probably would mean that all our trades are we're going to end up getting out early, and we want to collect those bigger profits. So this one I ended up with 3.3R But if I'd got out on that first little hiccup, then I would have only ended up with like 1R. So we want a reason for getting out of our trades. And this one, in my opinion, didn't really have one. It came to that low. I thought it was going to, maybe just pull back a little bit and then keep taking it out. Tough one. Almost a 2.5R win. Ended up losing 1.2 on that one. Maybe a little bit of slippage or something. And the next one, same thing. We had this big double pump pattern. And again, just waiting. It's a big pattern, just waiting for that little bit of extra confirmation. Could have taken a entry right around, I think it was this price bar here. We'd just kind of gotten up to that high, some strong momentum. So, there's nothing that says you have to enter the second you see that pattern. So this one I was just waiting to see, like, does it drop a little bit more? If it did, yeah, it's going to expand my stop loss a tiny bit, but I just have that bit of confirmation. It didn't. Instead, it popped back up. Then we had this much bigger false breakout above this consolidation and this high. So that made me feel more like, okay, we really tried to go higher there. And then once it got back below the bottom of that green candle, sorry, going over my things always brings up these things, so it kind of obscures what my mouse is doing. But once it got below that green bar, taking that short trade for the double pump. Again, I was a little conscious of the fact that the price had stalled here twice. So I was watching this, and it was a little bit, of course in my head I'm like, should I take it out? And I'm like, let's just give it a little bit. If it gets back up toward my entry point, maybe close out the trade, because it's showing a tendency to stop here. But I was like, give it a little bit of time and see if it can get to that 2.5 target. It did. And again, I was looking for that bigger drop below these prior lows. And it got to that prior low. This is what I was watching for. I wanted it to get to that prior low and to see what it did, to see if it snapped below it. Because usually if it's going to go below it, it'll just, go like a pip or two past right away, real quick. And it hit it, and watching the 1 minute bar, you're watching in real time, and it's bumping, and it probably bumped into it about 3 times, and then just, started to move up a little bit more than it had. So I got out right about there. That was a 3.3 to 1. And now why did I get out of this one here? Because we were already past my 2.5 to 1 target, so a nice trade already. And I was holding this for the bigger profit to see if it would drop below this low. And it tried, and it didn't. So the justification for me holding that trade any longer is no longer there. I would have already been on at 2.5 if I had put out that target. And I was looking for the drop below this. It didn't happen. So there's no reason for me to keep holding that trade once it starts moving up. So 3.3 there. Big rounded top here again. This one got pretty high up in there, so I was willing to, just take it on the first drop. Same with this one. You could have taken it, like I said here. You could have taken it on the first drop. I waited for a bit more evidence, mainly because we were also quite choppy here. Now we'd established a little bit more of a downtrend. So once this had gotten right down to that low, again, I was still thinking that these lows were going to be taken out. We've just gotten so close, and the Forex market just loves to clear out stop loss orders. So I was feeling pretty good that this would eventually take out these lows. So I was willing to take this trade. Big rounded top here. We can see the price barely makes any progress there. Lower swing low, clears out those lows, pops back up, does not make a higher swing high before it transitions back to the downside. So this one, pretty clean rounded top there. At this point, this is not an entry. It hasn't made a lower swing low yet. Right? This bar did not get down there. This double pump, this one was an interesting one. This is the one I opted not to include in the stats, and that was for a couple reasons. This is totally an optional trade. Now, we know we're in lower movement, so let's talk about the context first. We've moved, I believe it was about 19 pips over the last couple hours. So when this trade occurred, we were going from this low and that was the high over the last couple hours. We're at about 16, 17 pips. That's just kind of above the minimum movement I want. And we're talking about a trade at the extreme of, the last few hours of price action. Which means my target is going to be outside of, that kind of last few hours of price action. So when you have low movement, that's typically a trade you're going to avoid. We're not looking for, if the price is moving like this, and we're not going to put our target way outside that in low movement. So again, we're on the cusp of a little bit higher movement and also low movement, 17 pips. That's only a couple pips above kind of that minimum threshold I'm looking at. So a range kind of expansion breakout trade, not typically one I would recommend. So if you're going to take this trade, and this goes for any day where you have a low movement, if you're going to take a trade where you're expecting the price to break out, and it's low movement, the price action's been choppy, it's kind of more range bound, you better be prepared to exit that trade early. And this was the case here. I was watching this. I'd already been aware that we have these, series of lows here which have not been tested in a long time, have not been touched. So probably lots of stop loss orders from people trading, 15-minute charts, hourly charts, daily charts, things like that. Well, not daily, but hourly, 15-minute charts, 5-minute charts, things like that. Probably lots of stop loss orders under here. So I was still really watching to see if it doesn't move up, will it make an attempt to take out those stop loss orders? And we got that. So we had this move down, pop back up, move down. I didn't take this one because, as anyone who's taken the course knows, I prefer if it gets up here to the prior high, or I want more evidence. So here, it pops up, doesn't quite get to that prior high, pops up again, moves down. This one here is what made me interested in the trade, is that we pop slightly above this prior swing high. So a little bit false breakout above this, but we still have this overall double pump pattern in play. But this little false breakout above this kind of intermediate high, I guess you could call it, within the pattern. And then we had the drop below. So I was entering right here. I actually got into this one a little bit late. If I would have been right on the entry here, then this target was hit at 2.5 to 1. But I was a little bit, I kind of saw this red bar start to drop, and that's when I decided to get in. So I was just a little bit later. I can see entry was down here, 3.25, as opposed to maybe here if I was on the ball. So about half a pip difference. And as you can see down here, half a pip difference is the difference between me getting out for a profit or me having to get out here. So let's talk about why I missed my target, whatever. Let's talk about why I got out of this one early. And we kind of already touched on it. This is a range expansion trade. I'm expecting the price to take out these swing lows. It does that, doesn't hit my target, and then has this sharp reversal. No reason for me to be in this trade anymore. It did what I thought it was going to do. It was kind of going against my rules in the sense that, I was taking this trade expecting it to expand the range, take out these lows. But we know that we're kind of in a choppier type day. And anytime we're kind of in that 15 pips of movement or less area, then we're typically not going to expect these trades to just break out and run. Sometimes they do, which is why you can take them. But if you are going to take them, be very aware about just taking your profit when the reason for your trade no longer exists. So yeah, the justification was it was going to take out these lows. It did. Once it did that, didn't hit my target and reversed, then I got out. That's different than this one here, because this one here, I didn't get out of this one because I was still expecting it to continue moving to those lows, whereas this one had already broken below it. It had done what I expected. This one had not done what I expected it to do. So that's the difference between getting out early and not getting out. If there's no reason to get out, don't get out. If there is reason to get out because your reason for the trade has been invalidated or it has occurred but it didn't hit your target, then you can get out. Another big double pump here. Opted not to trade this one. It just didn't quite get up to my high, so I was thinking maybe this could push, and I was kind of hoping for maybe a little bit of a false breakout and then a breakdown. Or it could have potentially, if we have that push up, then sets up maybe some trades to the upside a little bit later on. And possible double pump here, not double pump, double pump variation, as we have this big double pump pattern here. If this didn't fulfill the requirements, which it didn't quite get up there, we can always wait for that consolidation, move back in the direction consolidation. So we can enter it here. We're right around here on that one. Again, range expansion trade. We know we're in lower movement. I think at this point we're up around 20 pips because we'd had this low up to here. So yeah, we're getting up into 21 pips. So don't have to be quite as cautious. The market's showing us that it is moving more than kind of that 15 pip minimums, where I'm really cautious. Once we start to get above that, I'm a little bit more lenient. So this one, range expansion, perfectly fine once you have about 20 pips of movement. But again, we have this low here. So once it takes out that low, if it started to reverse right away, could have also got out of that one early. But, no real reason to get out of this one. It hit the target just fine, pretty much straight away. Could have trailed it if you wanted, maybe got a tiny bit more, but pretty much would have ended up with that 2.5 no matter what. So that is how this day unfolded. As you can see from the stats, based on these trades, 5.5R. I just included these ones. This loss, this win is only a 2.5, and this win is only a 2.5. This one very close to being a full winner too, but I opted to get out a bit early, and I didn't include this one in the stats just because I had to explain that quite a bit, so it was a little bit more of an advanced trade. But that's why I did the video, because it's trying to understand the overall context and how overall volatility really plays into how, when, why we take trades. So they're all based on the same patterns, but that overall volatility really matters. I get charts all the time, people showing me, oh, this is around a bottom, this round a bottom, and it's always the same thing. Look at overall volatility. Look at overall volatility. How much has the pair moved in the last 2 hours? How much has the pair moved in the last hour? That is important. It's very important. Because it controls when we might opt to get out of a trade early, when we might not take a trade, or when we do take a trade. So the patterns are all the same, but this was a really good day of looking at overall volatility and using that to kind of play into how we trade. Also looking at how the price tends to just pop through these levels a little bit. So this one really struggled to get through this prior low for a while, but it did ultimately pop through. So we don't want to, cling to something that isn't happening. So this one, it's like, yeah, I thought it was going to drop below, but it's not going to do it this time. So this could chop around for, a while. It doesn't mean it's going to break out right now just because I have a trade. So it did what I expected, but then didn't follow through with it. So yeah, really good day for some important lessons. And yeah, if I would have traded just a little bit longer, probably would have picked up another 2.5R. So a really good potential day. And yeah, for the stats, I included these ones. So even just based on those, a pretty good day in lower movement. So until next time, happy trading.